Welcome back to Fast Market here on Schwab Network. Nvidia notching a new all-time high today. It comes after a couple of analysts become more bullish on the king of AI. KeyBank is raising its price target to 250 while maintaining the equivalent of a buy rating. Adding to the bullish sentiment, Citi is also boosting its price target on Nvidia. It's increasing it to 210. Noting that it is more positive on Nvidia's product ramp-up and competitive positioning. Shares right now higher by more than 2.5%. All right, let's put on those trading glasses. Welcome back in our co-hosts Tom White and Kevin Hincks. Guys, it is bull versus bear time. Before we get to your example trades, we have to talk about Nvidia and the take here. I mean, shares, we've just been talking about all that momentum around AI. Shares hitting a new high today. Kev, what's your take first?
I think NVIDIA is just, NVIDIA's got so much good news around it. I read a bunch of articles from analysts before I come on the air and get a general feel. Really, for the first time I'm ever remembering that one analyst is getting slightly negative on NVIDIA because he just thinks this circle of CapEx spending and the concentration, he's worried about it. Now, I don't think that's accurate. I think NVIDIA is still in the early stages, and I think the fact that they're investing in, broader companies and get involved in the other aspects of AI shows that Jensen Huang is he's investing in the whole spectrum of AI, not just selling the chips. And I think that is such a smart thing for him to do. Now, critics are going to say he's going around in a circle, right? He's investing in the companies, they're investing in buying his chips, and he keeps investing. But I think they see the whole pie of AI getting bigger, and that's why he wants to be involved. I think it's a smart move, and I think that's why people continue to get more and more bullish on this name. Diane.
Okay. Yeah, they certainly are getting more and more bullish. Both of those analysts out today, and obviously they're not alone when you look at kind of the general landscape of analyst views. Tom, what's your take?
Yeah, I think, the pullback from initial all-time highs, and then everybody was coming out saying by 2027 that they're going to see revenue sales start to drop. Comparables are going to be really hard. But I think one of the keys for this company, besides investing in NVIDIA, CoreWeave, and making these partnerships as they expand their footprint in AI, is that their innovation is second to none in the world. And everybody's going to demand that next big thing. Blackwell's selling really well right now. It does great for them. But at the same time, looking forward to when Rubin comes out and they continue to innovate in this space, I think that top billing and the catch-up that maybe AMD, Intel, and some others that would have to make and create is going to be a problem for a lot of those companies. So they're investing in their future. You look at their gross margins above 72%. Their growth rates 40%, especially on the data center side. So yeah, I mean, everybody kind of wants to knock the king off the top of the hill, but at the same time, as long as they continue to innovate, Jensen Huang does a really good job of parlaying their vision, their future, and if they get to open up some of their sales to China and maybe combat what they're seeing as far as competitive pressures in China, that'll be a bonus for the company also moving forward.
Everybody wants to knock the king, but can they? Okay, that's a great point there. But I know that you all have different approaches when it comes to the example trade today, and this is bull versus bear. Tom, why don't you take the first look at this one?
Yeah, I'll take the unfavorable stance here, using the option market here for my example trade in Nvidia. If you think it's gone too far, too fast, I mean, the stock, as you mentioned, hitting all-time highs here today. So the trade that I looked at takes advantage of one thing. If you can have your own direction, if you're bullish or bearish, this is an example trade that's bearish. It's based on implied volatility levels. We've got IV percentile rank below the 20 level at this point. So we're in the bottom near 90% of what implied volatility levels have been over the past 52 weeks. So I took that credence in this example trade here. If you think the stock's run too far, too fast, or maybe it's just going to pull back a little bit, this strategy takes advantage of it. I went out to the October 17th monthly options. These expire in 17 days. And just bought a put vertical. It's going to be a lower price put vertical because implied volatility levels are lower. So I'm going to buy the 187.5 strike put and then sell the 177.5 strike put. Bearish $10 wide put vertical to the downside. You're paying roughly, I've got 370 debit. Is what it was trading earlier. It's trading closer to $3.50 right now because the stock has moved to those all-time highs. But you're buying that slightly or basically at the money put and then selling a further out of the money put to offset some of the costs on it. If you pay that 370 debit, there's your risk, $370 per spread on this trade. Kevin, when you look at this, yeah, you're taking a bearish directional bias, but this is all about what the cost and what the risk reward is on this type of trade, right?
Yeah, this is the discussion we have a lot of. Paying $370 or $3.50 for a $10 put vertical. If Nvidia gets any type of news or the market sells off, Nvidia is widely held. This is a spread that can go to $10 and almost triple your money. And so, if you're long Nvidia, if you have bullish plays on Nvidia, this could counter that by putting a downside play on Nvidia. Because if you look at the chart, Nvidia doesn't go straight up. It has moments where it sells off as well, and you're planning on this. You've given yourself a little bit of duration, about 2.5 weeks, and so all you're doing is looking for a move towards the 177.5. 3.5 can go to $10, Tom, and so the risk is whatever debit you pay on this spread.
Yeah, and we've got the risk profile up there. That break even, 183.80 to the downside. That's where you need the stock to go. If you don't think it's going to below that level over the next 2.5 weeks, this isn't the trade for you. But this takes advantage of that low implied volatility level. And on a percentage basis, that's not too far below the current 187 price of Nvidia. So there's a look at the bearish side, taking advantage of that lower implied volatility. Kevin, you got something a little bit different. Walk us through your example trade.
Well, the momentum is so good right now for Nvidia that I want to do something that's not big risk, that gives you a chance to extend duration and chip away at the net debit. I just did I put a little duration on this one, Tom. I bought the October 31st 195 call. So about, where Nvidia is trading right now, it's about $8.50, $9 higher than it's trading right now. So I've given it a little time. You could do the October 10th expiration, but I did the October 3rd. I did this week. Why? Trading about 40 cents. I don't want to leave any of that on the table if it moves up towards 195. So that makes the overall calendar spread a little more expensive, but you can extend duration on this trade come Friday and chip away at the net debit. So I paid about $4.30 for this 195 call calendar, trading about $4.55 now as Nvidia has continued to rally. But this is looking for a move towards 195. It gives you daily theta to collect, and it gives you the ability to extend duration, continue to chip away at that net debit, and meanwhile the break even on this trade. So not a real aggressive trade, but a good passive bullish trade. It gives you about 19 deltas on the upside, Tom.
Yeah, and maybe not a lower cost way to get some exposure to the upside, but as Kevin mentioned, you want it to go up and near 195, but you've got a range on this one. But let's break this one down. October 31st weekly option. So you got a month. Buy the 195 call, sell that same call in the October 3rd weekly options that expire in just 3 days. Positive time decay on this spread, paying roughly $4.30 debit. As Kevin mentioned, it's a little bit higher because the stock's moved higher, closer to that 195 strike. But the debit you pay, so if you pay $4.30, $430 per spread, and you can see here the apex of profitability at or near that 195 strike. But you've got a range probably between about 187, 188 on the downside, and probably about 204, 205 on the upside to potentially be profitable on this one. Kevin mentioned you're going to have 4 opportunities to roll this and take in credits. That reduces your initial risk, reduces your exposure every time you adjust this, and then also it increases potential profitability on this. So the idea here is you're paying $4.30 debit, but you start chipping away on any potential adjustments. And then also, if the stock just kind of continues and move up towards 195, time decay will work in your favor, and that will potentially expand the price of this calendar also. So a good look at a different way to look at a directional bias, bullish to the upside, but still being kind of range bound. You probably still have at least $5, if not a little bit more, off of 195, either above 200 or below 190, where you could potentially be profitable on the call calendar, Diane. So 2 ways to look at NVIDIA here.
They're very much the bull versus bear take there.